All right, guys, I hope you guys are all having an amazing day today. I just want to give you guys a little update here on my Fundrise account. So let's take a look here. So we're finally over the $3,000 mark. 1 second, guys. Yeah, see, so we're over the $3,000 mark right here. I was able to make that other $100 deposit. So I'm starting to think if I should do it $100 per week, but I do want to show you guys how a small account could grow, guys. So I don't know, should I leave it at 100 per month or try to do 200 a month? Let me know, guys, in the comments below. That way I can show you guys how the account grows over time. All right, so we're over 3,000 now. You see the dividends just keep on adding up, guys. So we're at a total dividends of 53 and 53 cents. So as you can see here, the total is $66.11 for the year. However, that's because there's $13 in appreciation, guys. So you have to take that into account. So that doesn't get distributed out. It'll just be the dividends. So far $53. And for this year, for the last quarter, I received $33. So that means basically I have $20 so far in gains for the third quarter. So sorry, for the second quarter, guys. So I'll be receiving that let me see, in approximately July. I should be receiving the next quarter distribution. All right, guys, so this is just some of the activity that's been happening in the account. So it says here my portfolio has acquired a new project. So basically this was a fixed income project. So basically they invested $10.4 million into this project. As you can see here, so it's basically located in Georgia, so South Atlanta. So a new community of 119 single family homes, guys. See, so where would you be able to do this? I mean, if you guys could let me know what other options you guys would have where you could dump in some money and they'll be able to purchase real estate like this. All right, guys, so look at the return is minimal and the risk is minimal. However, they are anticipating, at least when it's around there, they usually say here what they're anticipating to receive. Let me see here. It doesn't really state here how much we're anticipating to receive from here. Oh, here it is, guys. So development exchange for earned rate of return of roughly 11% annually. All right, guys, 11% annually. So let's just do the math. Check this out. I'm going to show you guys what the bank gives you. All right, so the bank currently has, the highest I've seen so far, interest rates is about, let's say, I think 15% of 1%. All right, guys, so that's 0.0015%. all right, so let's just say if I had my $3,000 in the bank there, all right, this is what I would earn with the bank. So in 1 year I would earn $4.5, guys. That's a lot of money, huh? Yeah, well, they're making all kinds of money, so they would make, at least with my money, they would be making around $120 per year at a 4% rate. All right, guys, so that's why it's way better to have your money in here. So with Fundrise, I would be making around, let's just say the average, which I'm earning right now, is about 9%. So with Fundrise, I'll be earning $270 a year with Fundrise. All right, divided by the 4.5, so that's 60 times more than what the bank is giving me, guys. So let's just go a little larger. So let's say $100,000. I'm getting 9% on my money, so every year with $100,000 in Fundrise, I would be getting around $9,000. If I were to have that same money in the bank, that would be giving me about $150 per year, guys. Check this out. $150. Isn't that crazy? All right, guys, so you guys can see where your money will be doing. You leave it in the bank, it's never going to grow, guys. So like I said, just do your due diligence and find the investment that's right for you. Remember that real estate tends to be highly illiquid, so you really can't get your money back until some time has passed. So it's harder to redeem your money because real estate is like I said, a highly liquid asset. So that means it takes longer to either refinance or restructure the plan to get your money back, or sell the property. So, or depending on the type of deal that Fundrise does, which is financing sometimes, so they'll be able to get your money back quickly. However, like I said, this should be thought of as disposable income, guys. So basically, income that you don't count on, but that you know is going to be appreciating in value over time. Into this, so as you can see, this is premier real estate, guys. Look at that real estate here. Let's take a look at these photos. Look at that real estate, guys. Look at that development. Beautiful apartments, guys. So with this, we're anticipating of receiving, let me see here. So it's in Florida. Let me see. It doesn't really say, but look at the return is a little higher than the previous one of the single family home, but the risk is also a little bit higher. So look at, by the time they acquired these apartments, it was 207. It was occupied at a 91% rate, meaning that 276 out of 301 units was rented. So that's great. All right, guys. So it doesn't really say what they're anticipating this should receive here, but yeah, we should be receiving a little bit more than what the other acquisition should be giving us. So this is a 301 unit apartment complex for a purchase price of roughly $66.3 million, guys. So Fundrise invested 32 million, guys. So gave around half as the down payment. So let me see here. This is just some of the other acquisitions I've had, and the portfolio just keeps on growing, guys. Let's see if I can show you guys exactly how my portfolio is distributed. I'll go ahead and let me see here. I should be able to see it this way. No, I can't see it. Let me go to the desktop view. All right, guys. So look at my portfolio. So I have 127 active projects. 56% of them. 56% of them are allocated towards fixed income. And then from the core plus, about 11.5%, and value add. So that's basically just investing in a property to make it, either to modify it, make it a little bit better, trying to get some appreciation on that. They're trying to force the appreciation on these properties by adding value to it. So either renovating the apartments, doing paint jobs, landscaping, things like that. And then they only have a 4.7% on opportunistic. So meaning that's like extracurricular stuff, guys. So that's really money that's at risk the most, so the opportunistic. However, it's only 4.7% of the portfolio. All right, guys. So I'll catch you guys on the next update when I make the next deposit or receive any big updates on the account. All right, guys.